Alright, let's talk about taxes. Taxes are one of those things that everyone has to deal with, but few people truly understand. They're a necessary part of our society, funding everything from roads and schools to healthcare and national defense. Yet despite their importance, taxes are often a source of frustration and confusion for many people. Everyone has an opinion on them, usually involving the phrase "too damn high." It's a sentiment that resonates with a lot of people, especially when they see a significant portion of their hard-earned money being taken away. But taxes are more than just a financial burden. They're a reflection of our values and priorities as a society. But when we talk about taxes, we often focus on income. Income taxes are the most visible and immediate form of taxation, deducted directly from our paychecks. This is the money we earn from our jobs, the wages we receive for our labor. It's the most straightforward form of taxation, but it's not the only one. That's your paycheck, your wages, the stuff the government takes a bite out of before you even see it. It's a system designed to ensure that everyone contributes their fair share to the public coffers. But the reality is that not all income is created equal, and not all taxpayers are treated the same. But here's the thing, the really, really rich, they don't get rich just from paychecks. Their wealth comes from a variety of sources, many of which are taxed at much lower rates than ordinary income. This includes things like capital gains, dividends, and interest, which can accumulate to staggering amounts over time. Nope, they've got this whole other thing going on called wealth. Wealth is the accumulation of assets and investments that generate income on their own. It's money that makes more money, often with little to no effort on the part of the owner. This is where the real disparity in our tax system becomes apparent. And that's where things get really interesting. And by interesting, I mean infuriatingly complicated. The tax code is filled with loopholes and exemptions that allow the wealthy to minimize their tax liability. It's a system that favors those who can afford to hire expensive accountants and lawyers to navigate its complexities. Think of it like this. Income is like the water flowing into a bathtub. It's the steady stream of money that comes from our jobs and other sources of earned income. It's what we rely on to pay our bills and support our families. But it's just one part of the financial picture. Wealth is the entire damn reservoir. It's the vast pool of resources that the wealthy can draw from, often without ever having to touch their actual income. It's a safety net that provides financial security and opportunities that most people can only dream of. And right now, a tiny fraction of people are swimming in a reservoir of wealth, while the rest of us are fighting over leaky faucets. This disparity is at the heart of the debate over tax policy and economic inequality. It's a question of fairness and justice, and it's one that we need to address if we want to create a more equitable society. So when we talk about taxing the rich, we're not just talking about taking a slightly bigger slice of their paycheck. We're talking about addressing the fundamental imbalances in our tax system. It's about ensuring that everyone pays their fair share, regardless of how their income is earned or where their wealth is held. We're talking about figuring out how to tax the whole damn reservoir. This means looking at all forms of income and wealth and finding ways to ensure that the tax burden is distributed more equitably. It's a complex and challenging task, but it's one that we can't afford to ignore. And trust me, that's about as easy as it sounds. The tax code is a labyrinth of rules and regulations, and changing it is no small feat. But if we want to create a fairer and more just society, it's a challenge that we must be willing to take on. Because at the end of the day, taxes are more than just a financial obligation. They're a reflection of our values and our commitment to each other. Okay, so what exactly is wealth? Is it just a number in your bank account, or is it something more? Wealth can be a complex and multifaceted concept that goes beyond mere cash. It's not just piles of cash in a Scrooge McDuck vault. While the image of diving into a pool of gold coins is iconic, wealth in the real world is far more diverse and nuanced. Think stocks, real estate, art, yachts that cost more than entire countries, the classics. These are the tangible symbols of wealth that we often see in movies and magazines. These are assets, things that hold value and can appreciate over time, often way faster than your average paycheck. When you invest in these assets, you're not just buying things, you're buying potential for future growth. For instance, a piece of real estate can increase in value over the years, providing not just a place to live but also a significant return on investment. Similarly, stocks can yield dividends and appreciate in value, contributing to your overall wealth. And here's the kicker. A lot of these assets aren't taxed the same way as income. The tax system is designed in such a way that it often favors those who hold wealth and assets rather than those who earn a regular paycheck. This means that while you might be paying a significant portion of your salary in taxes, someone with substantial assets might be paying far less in comparison. You pay taxes on your salary every year, but you only pay taxes on your stocks or your Picasso when you sell them. This is known as capital gains tax, and it can be significantly lower than income tax. For example, if you hold on to a stock for more than a year, you might qualify for long-term capital gains tax, which is often lower than the tax rate on your regular income. And even then, there are all sorts of loopholes and deductions that can drastically reduce your tax bill. Wealthy individuals often employ teams of accountants and financial advisors to navigate these complexities and minimize their tax liabilities. These strategies can include everything from charitable donations to offshore accounts, all designed to keep as much wealth as possible out of the hands of the taxman. This creates a system where someone can be sitting on a mountain of wealth, but because they're not technically earning a huge income, they end up paying a lower effective tax rate than their dentist. It's a stark contrast that highlights the disparities in our tax system. Imagine a scenario where a billionaire pays a lower tax rate than a hardworking professional who saves lives or takes care of our teeth. It's a reality that many find hard to believe, yet it's the world we live in, which, let's be honest, is just objectively hilarious. The irony of the situation is not lost on anyone, and it often becomes a topic of satire and comedy. But beneath the humor lies a serious conversation about fairness, equity, and the true meaning of wealth in our society. Now let's talk about tax avoidance. It's a term that often gets thrown around, but what does it really mean? Essentially, tax avoidance involves using legal methods to minimize the amount of tax one has to pay. While it might sound straightforward, the strategies employed can be incredibly complex and sophisticated. It's not illegal, it's practically an Olympic sport for the ultra-wealthy. These individuals and corporations have the resources to hire the best minds in finance and law to ensure they pay as little tax as possible. Imagine a high-stakes game where the rules are constantly changing, and only the most skilled players can keep up. They hire armies of accountants and lawyers to navigate the tax code like a jungle gym, finding every loophole and deduction imaginable. These professionals are like elite athletes, trained to spot opportunities and exploit them to their clients' advantage. The tax code is their playground, and they know every inch of it. They set up complicated trusts, stash money in offshore accounts, and use all sorts of creative accounting tricks that would make your head spin. These strategies are designed to obscure the true nature of their finances, making it difficult for tax authorities to track their money. It's a game of smoke and mirrors, where the goal is to keep as much wealth as possible out of the taxman's reach. It's like a game of hide and seek, except the prize is billions of dollars and the people hiding have an unfair advantage. They have access to resources and expertise that most people can only dream of. This creates a significant disparity between the ultra-wealthy and the average taxpayer, who must rely on standard deductions and credits. And then there's outright tax evasion, which is a different beast altogether. Unlike tax avoidance, tax evasion is illegal. It involves deliberately misrepresenting or concealing information to reduce tax liability. This can include underreporting income, inflating deductions, or hiding money in secret accounts. Think secret Swiss bank accounts, shell companies in the Cayman Islands, the whole 9 yards. These tactics are designed to keep money hidden from tax authorities, making it nearly impossible to trace. The secrecy and complexity of these schemes make them a favorite among those looking to evade taxes. This is where things get really shady, and it's often difficult to track down and prosecute. Tax authorities must navigate a labyrinth of false leads and hidden assets, requiring significant resources and expertise. Even when they do manage to uncover evidence of tax evasion, bringing the perpetrators to justice can be a long and arduous process. The bottom line is, the wealthy have a whole arsenal of tools at their disposal to minimize their tax burden, both legal and otherwise. This arsenal includes everything from sophisticated tax planning strategies to outright fraud. The disparity in resources and knowledge between the wealthy and the average taxpayer means that the tax system often works in favor of those who can afford to game it. And that makes taxing them fairly a bit like trying to herd cats, if the cats were highly trained tax attorneys with offshore bank accounts. The complexity and secrecy of their financial arrangements make it incredibly challenging for tax authorities to ensure they pay their fair share. It's a constant game of cat and mouse, with the stakes being billions of dollars in lost tax revenue. In the end, the game of tax avoidance and evasion highlights the need for a more equitable tax system, one that ensures everyone, regardless of their wealth, contributes their fair share to society. Until then, the ultra-wealthy will continue to play their high-stakes game, leaving the rest of us to pick up the tab. Here's another wrinkle in the taxing the rich saga. Money is slippery, like really slippery. It can move across borders faster than you can say, capital flight. One minute it's in a Swiss bank account, the next minute it's buying a private island in the Caribbean. This makes it incredibly difficult for individual countries to tax wealth effectively. If one country raises taxes, the wealthy can simply move their money elsewhere. It's a global game of whack-a-mole, except the moles are billionaires and the hammers are hopelessly outmatched. This leads to a race to the bottom where countries compete to offer the lowest tax rates to attract investment. But who really wins in this race? Certainly not the average taxpayer who's left footing the bill for public services while the ultra-wealthy skip off to their tax havens.